everyone. My name is Doğan. I'm the founder of Neon, an ecosystem, which is an ecosystem for insurance innovation. We basically help our corporate partners, meaning insurance companies, reinsurance companies, and brokers, or other corporate partners, to be honest, find, invest in, or work with insurtech companies. I will be moderating this session today. I'll ask our speakers to introduce themselves in a little bit, but today, we will be talking about overall customer retention. We'll cover topics like customer retention strategies, data-driven processes, impacts of losing a customer, which is an interesting topic to discuss, customer behavior-driven product innovation, and touching the technology side of things, always in data side of things. How do we leverage AI or Agile AI to increase customer retention and to analyze the impacts of customer retention related topics? Harris, would you like to
Sure. Thanks, Doğan. Hi, I'm Harris Clarke. I'm Vice President of Claims, Sales and Service at PEMCO Mutual Insurance Company. We're headquartered in Seattle, Washington, and we really just sell personalized insurance in the Washington and Oregon areas, so focused on the Northwest. And our differentiating, and we'll talk about this as we get into retention strategies, but our focus, once we have somebody on board as a customer, is creating a remarkable experience for them. That's it, PEMCO.
Now, Harris, I have to catch up with that nice short description. Okay, so I'm CEO and co-founder of Tazi.ai, Zehra Cataltepe. We are headquartered in San Francisco. We create design automation for AI. So we have an Agile software as a service automated machine learning platform. We enable business people to update their business processes based on AI outcomes. We have an underlying patented no-code machine learning technology, bringing together continuous learning, interactive AI explanations, and human-in-the-loop. We are a Gartner Cool vendor because of those. And right now we are bringing solutions, especially in customer retention and claim fraud detection to insurance industry. Thank you.
Awesome. And we'll ask Igor Di Beo, CUO of Axa Brazil, to introduce himself once he joins. He's running a little bit late. Today, how do you see insurers, insurance companies, and maybe brokers as well, manage their customer retention strategies in terms of how do they identify the root causes for churn, for example, in a broader aspect? How do you monitor the behavior of customers today?
So that's a great question. The answer is in the data, and it's not always easy to understand what's happening. So at the very basic, when we look at churn, when a customer cancels with us, we ask them why they're leaving, and we attempt to capture that. But a very common way for customers to cancel their insurance policy is simply not to pay the bill. So we don't know why they left in those cases. They get a renewal offer and we never get a payment, and they get a cancellation notice. Because that system's all automated. We don't want to be on a risk for which we don't have premium, so we try to shorten that window as much as we can within the regulatory requirements. So what we're trying to do is trying to discover those customers before they tell us they leave, or find them before they don't pay their bill. And so we attempted to build essentially a multiple regression model using about 12 variables. And one of the key variables is if the price went up and how much it went up. And we have a group of customer service agents. So these are licensed agents that will call out to that group and attempt to persuade them to stay, and essentially do a policy review. Because if price is the issue, and doing a policy review, they may find some missing discounts. The customer may want to change their coverage amounts. In some cases, we retain the customer and we sell them additional products. Right, so it's a good touch point. How do we monitor behavior otherwise? Again, it's in the data. I think we look at how they interact with us, transactions that they have, if they have this transaction online, and in what form they have that transaction with us. Do they come to us through a chat channel? Do they, we've got mobile apps. Do they come interact with us on the mobile app, for instance, or do they come in online? And what kind of transactions are they doing? So we have that information as well to get an idea of what our customers may be doing next.
Yeah, absolutely.
So that's a general sense of how we kind of keep track of what they're doing relative to the likelihood of staying with us and how we try to influence them.
Follow-up question on that. You mentioned data. You're absolutely right. That's been my experience as well, right? We lose the customers, we don't know why. So the prediction models or early on identifying those points, those insights for the business people before we lose the customer, can we actually act on it, becomes the very key area to develop and act on them. But before we dive into that part of the conversation, I want to ask you how hard, not only for PEMCO, by the way, it's overall industry-wide, your experience. How hard is it for insurance companies to digest the external data points, or combining them with internal data points that they have, and create that insight framework basically to act on?
I mean, in terms of just getting the raw data together.
Right. Correct.
I think it varies. It really depends on the underlying technology infrastructure. I've worked for some companies where it's quite easy, and I've worked for others where it's a little more challenging. They might have a multi-tiered environment. They have data on the mainframe. They have data in SQL servers, and it's spread all over. Some of the data is not normalized, and it's not stored in fields that were intended for that data. So you've got to sort all of that out before you can actually use it. I think most companies have that to some degree. Some have just had more discipline in terms of how they govern, how they manage their data governance. But I work with students that are working on Masters of Business Analytics, and when they get assigned to working with a company for an internship, they're always surprised. The data is so dirty,
right?
Because I'm like, that's the real world. All the stuff you get in university, the professor's already scrubbed it, right? So easy to work with. The data you get in the real world, very, very tough to work with sometimes.
Yeah. By the way, let's pause on our discussion. Igor, welcome.
Thank you so much.
Why don't you introduce yourself?
No, apologies for the delay. It's very bad from my side, but finally we managed to be here. My name is Igor Di Beo. I am Brazilian. I work in AXA for more or less almost 6 years. I am a mining engineer in terms of background. I have been working in the insurance and financial services industry for 25 years by now, so quite a long time. And at present, I am responsible for underwriting, distribution, and marketing for the P&C business in AXA here in Brazil. So nice to meet all of you, and very happy to participate of this very rich and impactful live with you.
Thanks, Igor. So we actually started to discuss already, and we were hearing, Harris's insights about how does an insurance company today manage their customer retention strategies, and basically immediately Harris started saying data. But then we a little bit dived into how that raw data is dirty, and it's really a challenge to digest that for organizations, right? So maybe to get your thoughts on that.
It's a very interesting topic, because today we manage this kind of thing looking back in the back mirror. Yeah, so we are not forward looking into behaviors that might lead to a customer to continue in the organization or to continue to be a client of you or not. Yeah, we are always back mirroring with KPIs, with renewal rates, with churning rates, but not understanding what is making customers to leave your company, or if they give any kind of early warning that they might be with you or they might not be with you. So I guess the insurance companies, at least here in Brazil, they're still crawling in the sense of understanding customer behavior, even more because also this behavior can be driven by the brokers coaching the business for them. Yeah, you don't have only the final customer, but you also have the broker coaching some kind of business for those clients. So you also have an intermediary that the broker can kick you out or put you in the game again. Yeah, so it's a very complex process, and today not really with the total attention of the companies as they should have. At least it's my view here.
Right. Thank you. So I have a couple of questions actually prepared for all of you, but there's a question coming in because we call the data dirty, which is true in real life. Come on. So Harris, back to you. Do you think it's harder to convince them to try to use AI solutions? How do you see that?
No, I don't think that's. I mean, it's anytime. I think anytime you want to do anything that's more advanced with your outside your whatever your normal processes or workflow is with the data, to whip it into shape to whatever advancement you're trying to make, that's going to be something you'll have to do. So I don't think that's certainly not a reason not to explore AI or machine learning solutions. It's just part of the work that has to take place sometimes. Because once that's done, really, and my experience with the Tazi platform has been, once that's done, the building of the models is pretty straightforward.
Right. I want to turn to you, Zehra, because you have been, Tazi has been working with insurance companies, with brokers, with banks, with even non-insurance companies, giant companies actually in the world. How have been your experience in terms of pitching your solutions and how receptive the insurance industry is?
First of all, I want to thank the panelists and also all the attendees for joining us. It's just great to be here, and so Doğan, everybody is asked the question, how did you get into insurance, right? So we got into insurance because our first customer, one of our first customers, was an insurance company, and they helped us so much with the development of the interfaces that you are seeing today. I envision insurance as really the industry to use AI because insurance's life depends on predictions, and insurance professionals are used to making those predictions. I see all the insurance people as kind of Iron Man or Iron Woman, playing with the machine learning models and predicting the future better and better, but together. And Iron Man is alone. In insurance, you need people to be working together because it's a very complex business. So predictability becomes a very important question because sometimes things are not predictable. So I want to tie it up to Igor and one of the questions that we see at the chat. So how far down the road can you predict something? There are limits based on a lot of things, but based on is your data clean or not? And we should talk about data cleanliness as another question. I see that as an agile process because sometimes while you clean the data, you may be throwing the bath with the baby with the bath water. So that's another close parenthesis. But for predicting the future, we have been learning so much from our customers on what to predict. So for example, definitely you should be predicting your customers' churn definitely a month in advance. But that's not really the whole story. So one of our customers told us, hey, we actually know some indicators for churn based on our experience. So can you please predict something that indicates churn? So suddenly they are taking the time 3 months ahead. So they are able to predict not just churn, but indicators for churn. So, and their domain knowledge, okay? So I could have asked the AI model, hey, AI model, predict the churn for next model. AI model predict the churn for 6 months. And the AI model will probably say, you know what, I can't predict anything because you don't have any, relevant variables that can tell me how to predict that. But then with the domain knowledge, now we are predicting indicators for churn. And they are actually right now giving actions to like hundreds of people on how to prevent churn, and they are even given explanations on how to prevent churn. So I found indicators to be very important. I found inclusion of domain knowledge very important. And last thing I want to say is we should look at churn as not as my customer leaving me, existing customer, but midterm cancellations are very important. And also the new customers are also very important. I was buying insurance. Okay, I went to one company. They told me, you know what? It's 2 weeks. You have to wait for 2 weeks to buy insurance, and I'm paying. I have a certain cost of moving from one place to another for those 2 weeks. So I said, no way, I'm not working with you. So I asked actually the agent, can you suggest someone who can give me insurance today? And there were 2 other companies who did give me insurance today, and I bought insurance from them. So how fast your processes are, are they giving you response right at that time is very important. People think about FNOL, when claim happens, respond immediately. But when I ask for an insurance policy, I should be responded immediately. When something is wrong with me, my insurance company should respond immediately. So I really dream of insurance people being like parents for everyone, not just telling us to move out of the way of fire, but also telling us things like, hey, you are a risky person, but look, there's a micro segment right next to you, and those people are not risky, and the difference between you and them is this little thing. So can you change that? So that comes to again Igor's question or comment on causality, okay, and Harris's comment on the person that just cannot pay the insurance. So we also, as soon as we understand the reasons behind churn, immediately other actions come to mind. And I'm sure Harris and Igor can tell us more about those. But I really love looking at this as a complete problem, not just a very data scientist focused. What is my model? That doesn't work. It has to be data science. It has to be AI models being produced internally. Upskilling your people so that your people, your insurance people, can create models in a very short time, and then build and destroy those models because some of them will not work. But being able to do that, I think, is very important, and our customers are going on that journey, and I'm very happy that as Tazi we are part of that journey. It's a very exciting journey for us as well.
So I want to say one thing. In your example, of course, it depends on the insurance products. We all know all around the world, but saying that you cannot wait, you want your policy today, you cannot wait 2 weeks, you eliminated like 70% of your options.
Yeah. I was going to mention too, it's not uncommon for companies in certain lines of business to give you a discount if you get your quote, and because you're planning out your purchase. The loss experience for the, depending on the product might suggest that. So we don't know why. We talk about causality. I don't really know what, we don't know why that is, but that's the presumption somebody's planning.
With causality, I just know we are at an EU project called Trust AI, and we are really thinking about like causality there, and as soon as we get some stuff out, of course I'll let everyone know. But it's a research topic, but some causality as domain experts, the reasons. So rather than going to academic work, I'm whenever we dive into models, insurance experts understand their reasons because they are sitting on 30 years of knowledge with their customers. So I think some causality known and actions can be taken actually, and some we can't do anything about it. But even then, you can handhold your customer, and I think that's valuable because it's a long-term relationship, right? So a customer who can't pay today will pay tomorrow, and they will come back to you. So I mean, I see the frontline workers, like the customer outreach teams, social skills, social IQ, emotional IQ to be so important in whether the customer remains or not as well. Anyway, I'll shut up. You should.
No, please don't. At least for the next half an hour, please don't. But I'll actually, I would like to turn to Igor with a follow-up question on everything that we discussed, right? In my life, insurance companies, in my experience, insurance companies tend to follow a more like risk-driven approach when it comes to customer retention and all those strategies, right? But how do we embed customer behavior and in all the facts that you guys just mentioned? How do we influence, if you will, if that's the right word? How do we influence the product strategy and the pricing strategy?
Well, just before I saw one of the questions for how long time you also should monitor it, and Zehra also touched this point. I would say that you have to be monitoring things during the full insurance journey or the full insurance cycle that the client is with you. Because otherwise, there could be some points that you perceive in the beginning, but other signs that you come more to the end, or you have no sign of interaction of the customer with you. That also could be a bad sign to retain this customer, because he could be completely unhappy that he's not saying anything, that he'll lapse or he'll cancel the insurance or he'll do something. So I guess it's a constant monitoring process. And also what Harry said about, well, sometimes the client doesn't have the money. It's true, you also have external factors, you have economic crisis that could influence in this kind of churn. So monitoring this with the data that you have, with the interaction that you have with your customer, as well as with those external factors, it's really, really relevant. Yeah. And talking a little bit, yes, Zehra, I don't know if you... No?
Actually, I mean, I just have to say it. Okay, so to me, everything looks like a machine learning problem, or
Of course it does.
So for that, I really apologize. This is really a deformation probably, and my family is so tired of me because of this. But about that, if I know that the costs are high, my question to both Harris and Igor, because we are working with an auto manufacturer to figure out when the cars will need, repair on certain parts. So if the customer is leaving because the insurance is priced so high, could we reduce costs by predicting, whether some parts or some accidents will happen, some parts will fail. So insurance will be needed. I mean, those parts will be needed, those repairs will be needed. And then I know that PEMCO has some agreements with repair shops, but could we predict beforehand what will go wrong so that we can take precautions? We can order parts beforehand, make them cheaper for the customers, etc. But sometimes that differential that you could make in the price might not be enough for the customer. But would that help? Is a question to Harris and Igor.
Yeah, in terms of managing the supply chain of the car repair,
Yes.
probably not. I think our focus, what we've seen in terms of customer retention, customer satisfaction about car repair is the faster you can do it, the better. And since those body shops are independent from us, they're operating independently. So how much we can influence their supply chain, I don't know. Again, it's a data question. If we had the data, we could maybe, and from a regulatory perspective, we can't really steer customers to a particular body shop. They get to choose where they have their car repaired in the U.S. So we have to they can take it anywhere they want to go. So that's that limits the influence we can have over that, I think.
I see. Thank you, Harris. Thank you.
And Don, sorry for deviating a bit from your question, but back to
that was great.
Basically, for example, if you see that your product has a huge churn, it might have a design also that might be wrong, right? Because people maybe are buying that for a kind of impulse, but when they realize that this product is useless or it's very expensive, or I don't know, he's not looking into value for that, you should change it for the customer to perceive that product has a value to him. Yeah, because a high churn could be also an indication of a wrong product design, could be due to a pricing issue, and we see as well that customers that remain for more time in your company, they also have a better result. So for you, so they have a better loss ratio in your company. So going a little bit into this direction, maintaining the client in the company, it's also good for you. It's good for your results. So defining products with correct features, with usability, with a good product literature that he can understand what is covered in there, that he has a good claim service when he needs. This makes completely the difference, and also makes clients more happy and with a higher chance that they continue working with you. And if they continue to work with you, they renew their policies, potentially they will bring more results to your company, because usually a new customer for some lines of business in property, for example, have 5 to 7 percentage points in loss ratio higher than what we see for recurrent clients here.
Right. Harris, anything you want to add to that?
No, I think Igor's right on. I mean, there's the new business penalty. So retaining a customer is if you've got the product appropriately priced, it's always better to keep that customer than it's losing, because you got that loss ratio difference. You've got the acquisition cost as well. So you throw that in. That's a pretty compelling case. And if you've had them longer, you've had a longer chance. You've had opportunity to cross-sell, to sell other products. So.
Right, and that was going to be one of the questions that I was going to bring up actually in like 5-10 minutes probably. Zehra and I we have been discussing that. What happens when you lose a customer, right? So is it really like from a company, IT solution or solution investment standpoint, maybe isn't it better to invest in this kind of solutions so that you can actually predict, you can act timely, and you can retain the right customers, and maybe not retain the wrong customers according to whatever strategy that you follow, what your strategy is. But really, if you don't have an action plan or the ability to execute that action plan, to get these kind of customer retention insights and churn and everything, you lose the customer without knowing why you're losing. Harris, back to your comment very at the beginning, you lose the customer, you don't know why, because that's the worst situation ever probably, because once you lose it, you lose so many other things, like cross-sell opportunities, going back to that customer and acquire that customer again from scratch. So any insights from from that standpoint?
Well, I think that's absolutely correct. I also have a background on the pricing side too, and there's a little bit of you kind of have to harden yourself and recognize if you follow a rate for risk philosophy, there are some people that they're going to leave because you have raised their prices, but you're offering them a price that represents the risk they represent. You have to recognize that. But if you've got that right, you want them to stay. So if you operate with that philosophy, if you can retain everybody that's eligible, meaning there are probably some risks that you just don't have a price for because you don't have enough experience or you don't understand that domain. You want to keep them. And again, it comes back to that seasoned business, people that have been with you longer, the financial results are much better. So absolutely correct.
Yeah. Okay. I have a question here, and that question is directly pointed at you, Harris. So you wanna take that? But I would like to open that actually for Igor and Zehra as well. Basically, have you noticed a higher churn rate within the last year in the industry? And if so, do you think insurance industry are looking for more machine learning solutions to help retain the customers? I think it's a good question.
Yeah. So you mean with the last year because of the pandemic?
Well,
just recently, more price sensitivity.
Oh, yes.
No. There's a very strong correlation between pricing disruptions and churn. That's where it is. We operate in the 90 range pretty much all the time. It vacillates a bit, and we're putting on rate. We see it with less retention. So just in the last year, it hasn't really changed that much. But it comes back to what we're talking about: a retained customer. We can just improve retention a little bit. The financial impacts are significant.
Right. Absolutely. And Igor, I would like to get your opinion on that as well, because I know the Brazilian market and your profile, Axa's profile, especially in the Brazilian market, you have a lot of different products, but that maybe 0 point something improvement in the customer retention, that has a huge impact, right?
Absolutely. Well, basically, when we talk about brokers, for example, that they can be a kind of customer for the insurance companies. Right. We can see a persistency of their business much more with us in the renewal rates in the beginning of the pandemics. So we see our renewal rates increase substantially, maybe because everyone was trying to disturb as lower as they could their operations. But new business was a bit more difficult. But renewal rates in the beginning of the pandemics, they increased a lot. So that means that the retention of the customers in the company was substantially higher. Now we see things coming back again to normal, fierce battles between insurance companies coming back again. We are getting new business, but we continue to have very, very high renewal rates, in some cases above 85%, 90% in some cases. So we are very, very proud about this, keeping a so high level of the renewals.
Yeah. Thanks for that. Zehra, I wanna actually turn to you about. In these conversations, I always bring this up, right? Let's not stay in the theoretical level. Let's talk about real life examples and use cases. So, how would an AI model work to increase customer retention? But what I mean with that is in real life. While the insurance and brokers have very experienced insurance professionals, and I feel like we have that dilemma as well, because hey, I know, I've been doing this for 30 years. I know what my customer wants. Statement is very common. Let's face it, all around the world. But at the same time, we have been talking about, and the whole industry is talking about data, how to digest that, how to implement predictive modeling and all those capabilities. How do you see that in real life?
Well, none of us want an archaic person who assumes things about us, take actions for us. And none of us want a robot, that doesn't really hear us or understand us, take actions on us. So we want a hybrid, right? So we need augmented solutions. So in our journey, we have been able to increase customer retention, by the way. So we do have use cases, we do have customers where we were able to deploy a solution in 2 weeks, and then in 3 months' time, the A/B test was amazing. So there is B, the existing solution, and A, us, and their retention also, like the existing solutions retention also increased, while Tazi's retention also increased. And that increase in the existing retention was because while our customer was going through their data, they realized that some pricing actions were not actually being reflected to the agencies. So agencies didn't get the updated prices because of some IT problem. So things about your data hygiene that would not be discovered otherwise can be discovered when AI models are looked carefully by insurance experts, not just by data scientists. So what we are bringing is that combination of AI models. It's not just AI models. So Don, I want to change the question. How would an AI models, not just an AI model, AI models, because for taking actions, you need AI models as well. It's not just a customer retention model, it's interrelated models which have been produced to answer different questions in a timely manner. So how would AI models, business people, and business models, how can they work together and how they can be updated? We have one of our customers, I'm just so happy about that. We have one of our customers who said, with you guys, we are updating our business models every day. So they are doing Agile AI. It's an insurance company, but every day they have Scrum meetings where they go through AI models, they go through other models too. It's not just AI models, because an AI model has to live in an ecosystem of GLMs, other simpler models. I really am for, we want to predict something, and with that prediction, we want to help the customer meaning the end customer. So whatever works should work. And sometimes an AI model will work, sometimes experience will work. So we are able to, as a platform, we are able to combine all of those through easy to use interfaces. Because I don't think we should make every insurance person a Python coder who can write AI models. No, we need their domain expertise being taken into AI models. So just like, not everybody has to be a mechanical engineer to drive a car, you don't really have to be a data scientist or a Python coder to understand a machine learning model. And in understanding, you don't really have to understand everything. You have to understand what is operationally affecting you with the AI model. So to answer your question, yes, Doğan, AI models together with business experts who see them as apprentices and who are able to create more of them, who are able to destroy them, update them easily, together with data science teams. I think that works. That is a formula that works. And I look at customer retention as really the heart of an insurance company or any company. Because your customer retention tells you so much. If your customers are leaving you, there is something wrong with your product. You are not serving your customers right. But if you are offering a product and if everybody is running to that product, then you should think about, as an insurance company, why is everybody buying this? It's like, as data scientists, when we create a model, sometimes there is leakage in the data, okay? So you might see a junior data scientist jumping around, hey, my model predicts 100%. Then I say, no, just look, maybe something is wrong with your model. So we put precautions. In Tazi, we have those warnings. After seeing so many of our data scientists jumping around, now we automatically say, warning, there might be leakage with this data. So just like that, I think for insurance too, when you produce a product, if that product is being bought by everyone, maybe you are not really able to calculate risk right for that segment, and you are going to actually lose in the long term. So even before seeing claims, you might be able to actually figure out that your pricing was not right because you are looking at your customer retention models. So I'll just stop there, and maybe I hope I have been able to answer that question, Don.
Yeah, thank you. Harris, anything you want to add?
No, I was just going to say she's absolutely right. I'm sure Igor feels the same way. If you put an insurance product out and it sells way more than you expect it to, your immediate reaction is we underpriced it.
Right.
It's too popular.
Yeah.
If something is too good to be true,
it's too. And it's
it is. There's probably something wrong with it.
If you're in the sales part of the organization, it's too good to be true. If you're in the product side of it, it's like, oh no. Yeah.
Yes. I mean that brings the silos, right? I mean the communication between different departments.
Right.
In our teams, actually, we have not just data scientists and underwriter, but sales and marketing. Actually, everybody looking at the data and models together. I found that to be so effective. Right. But I have one little question. Maybe there was a reason why in insurance there were silos, because in AI we want models to be as independent from each other as possible. So when we combine them, they work better. So if we all say the same thing, and if our thoughts are combined, then it's still the same thing. But if things evolve in their nature in different ways, and then you combine them, then actually you might get better results than one or the other. So this is just a question. Maybe is there a historical reason to maintain that diversity on predictions, so that predictions would be healthier for the future? I'm just why are there silos in insurance industry is another conversation, maybe, Doğan.
I'll probably say another conversation,
yeah.
And
Yes.
it's an interesting question though. Personally, I always found that very interesting, and I'm not going to say I did not like it, but I wish those silos were more embedded with each other. But I can definitely see the safety net, if you will, for each silo that is also needed to a certain extent. So right. I think the overall insurance industry could have been more efficient when we combine the silos and then talk to the customer, and we are improving, I think. Overall, slowly, very slowly, but that's how insurance works, and that's a separate conversation, I think. Thank you for that, though. But I really want to turn to Igor and Harris once again, and lately what I'm realizing is, because we're talking about customer retention, how we can create these preventive models so that before we lose the customer, we can take an action. It's been actually very interesting, because on the underwriting and claim side, you see insurance companies investing more and more recently on the loss prevention things as well. And so my personal opinion is this is because of data. Data is out there. We have all these models. We can actually use them in a systematic manner. So, avoid the claims before a claim happens, right? Or avoid the loss of a customer before you lose the customer. So how do you see the industry overall changing? I guess is my question. Igor, let's sorry.
No, basically I agree with you. There is nothing really too different to tell you from what you have already said. It's maybe what I could add is that the insurance business is still very, very traditional, and also a little bit Byzantine eye into the eye. So introduce new technologies, new tools, new ways of measuring things still might cause some kind of fear in the people working in this business, because they still like to have the eye in the eye and so on. I guess you don't need to lose one to have the other. I guess the second one can make more efficient the eye to eye when you need to have it, when you need to have the contact and to direct better your efforts, your actions. I see much more on this direction. You don't need to abandon a more traditional style to have something more efficient and channel focus your investments, your time, your actions in this direction.
Right. Harris, anything you want to add?
No, I don't. I agree with everything Igor said. I think it also comes back to the data and information you have access to, and how you can make use of that to improve the value you deliver to customers. That's really the who can do that faster and in unique ways. And machine learning helps enable you to do that.
Right. And a follow-up question on that, I always like asking this question, and I'll turn to Zehra for this. Whenever in my former life, whenever a technology solution comes up, it becomes a 2-year project. Usually, typical insurance company would take that, right? Oh, a lot of people gets involved, and it becomes such a huge project. Zehra, in your experience, how have been the implementation of such processes been, or such technology, your solution in this case, been? How long does it take to run a POC, a proof of concept? How long does it take to see the first results of such a solution, so that you're adding value, you're starting already adding value to the insurance company?
I think that's a question, might be a question for me.
Go ahead.
That's okay, because we're using Tazi, and I'll kind of give you, because we're using it in our customer retention program for calling out. So we've got this group of agents that call out to attempt to retain customers, and the way we've done it in the past is we have a very simple model that indicates who you should contact, and so they get this list, and they start calling the list. They have to bring up our system and kind of research the customer, figure out, should I call this customer? There's some things they have to look at before they call the customer. So I think most of the time we spent was probably 8 weeks getting the data, and within I think 10 days we had our first model, and we've started an A/B test, and I'm not going to get specific numbers, just a sense of magnitude, but this group of people has more than doubled the number of people they can contact, because they don't have to go through the research aspects. The results they get from the model, they use those to call those people. So we've got an efficiency lift right away. And what we've discovered is the model is much better at predicting who's going to churn. And it shows up in some of the stories that people in that group tell now. Before the model, they often contacted these customers to do a policy review and talk to them about their policy. They're like, we're so happy. The customer's like, I'm so happy to hear from you. I love hearing from PEMCO. And using the data set that the Tazi model produces, they call the customer. The customer says, oh, I'm so glad you called. You guys are awful. I can't wait to cancel my policy. I'm like, oh, those are the people we want to talk to.
Right.
So the lift has been significant. Yeah. So looking forward to seeing how that in a very short time frame. The most of the work was on our side in getting the data together.
Interesting. Thanks for that.
I don't know if I can add anything on top of that, Harris. Thank you so much. It's an honor. I just want to add the Agile aspect, Doğan. Ocean wasn't filled in a day. So you are not going to have all the data available in one day. I mean, the social network data, geographical data, the machine data, telematics data. I mean, you're not going to have everything under your fingertips in one day. But again, one of our customers said, every day they are not using you, they are losing money. So they should ask themselves, not how much money they will gain if they use you. They should think about how much are they losing when they are not using you, because it's really not about yes, we have those numbers to say yes, we are doing better, but it's a very complex system, and realizing the things that are going wrong while the system is working is important. But also it's also important to say, I'm not going to get all the data available for me right now. With whatever data available, I'm going to work. And data, what is important, the data important for claim fraud detection might be data which is not important for customer retention. So you should really really prioritize the data gathering attempts for specific solutions, because for each solution, the return investment, because we do report always the business KPIs. You have an idea on if the performance of this model was 5% up, that would actually result in like $5 million more. So this feature is so important. I want to prioritize my efforts to collect that feature rather than the others. And also, I also want to talk about this idea of data proxies, because sometimes the additional data that you need for better predictions might be not available. You might have to tell your customer to wait for 2 weeks before you can get that data. Right. Or sometimes that data might be very expensive. So what you can do is you can try to predict some of those features as a data proxy, as a kind of like a virtual sensor, so that whenever you can predict reliably, you just initiate your model. So you are able to respond to your customer really fast. And when you cannot predict reliably, then you have to wait. But you are able to respond to a lot of customers on time. So I mean, I just want to open that parenthesis on data proxies. But in general, data availability and data cleanliness are the most important issues on the input side. But also you also have to think about always the action side. So what kind of actions can we take with this model? So it has to be an agile process where you have data, machine learning models, results, always displayed to business, and the business can see what kind of actions can be taken. And then they can go back and say, you know what? I don't like this model. I want the model to perform in the following way. So the devil is really in the details. And when things become actionable, when business have a more say in what the models should do, we end up with better and better models. So instead of just having an AI for customer retention, you might have AI for customer retention for the owners of Toyota Corollas. I mean, so you might actually want to dive more for certain segments, because you might find out that there are things that you can predict more for those customers and be more useful. I hope that answers the question. Absolutely. And looking at the clock, I'll have to end the conversation today. I'm pretty sure we can go for another hour. But thank you so much for your time. We discussed customer retention and the opportunity of leveraging AI, Agile AI, to create those strategies with Harris of PEMCO, Igor Di Beo of Axa, and Zehra of Tazi. Thank you so much for your time. Thank you also.
Thank you so much. My pleasure.